What's actually happening in the California real estate market? That's what we're going to dive into in today's video. We've seen the number of homes on the market increase. At the same time, we're seeing the median home price in the state of California decrease. But is buyer demand really falling off? Is it becoming more of a buyer's market, or is it still a seller's market? That's what we're going to dive into in today's video as we look at the July home sales and price report from the California Association of Realtors. We're going to dive into the data of that report, and we're going to translate it to talk about what it actually means for you as a home buyer, as a home seller, as we move throughout the rest of the year. Now, do me a favor, as we're going through this information, if you have thoughts, if you have comments, leave them below. Let's have a conversation about what that means. And if you find any, of this content helpful at all, do me a favor and hit that thumbs up. All right, so let's take a look at that report. As you can see, the existing single-family home sales totaled $428,980 in July on a seasonally adjusted annualized rate. It's down 1.6% from June and down 2% from July of 2020. What does that actually mean? That means on an annualized basis, this is essentially how many homes they are expecting to sell in the state of California on an annualized number. Now, it's down a little bit from the previous month and down a little bit from last year. July's statewide median home price was $811,170. That's down 1% from June, but it's still up 21.7% from July. So median home price in June was actually a little bit higher than the median home price in July. So we've had a decrease, but again, we're up nearly 22% from last year. Now, last year, remember, coming out of the pandemic, you had April and May, which were really slow times in the housing market. And June, July is when everything started to pick up. People had been locked in their homes. People were told they could work from, remotely. They no longer had to come into the office. This started the craziness in the housing market. And that's why you saw such a big increase in the number of home sales, and why we're, probably starting to decline a little bit on a month-over-month basis each month, because we're coming off such high numbers from last year that it's going to be very, very hard to maintain those numbers. It's not manageable, and it's not feasible, and honestly, it's not a good thing, right? Having a decrease in the number of sales is actually a good thing to some extent, because if we continue that increase, that means any available inventory coming to the market would just get gobbled up, and that inventory levels would stay low, and that is what created this. So as things slow down, that's going to give inventory more of an opportunity to build, which gives us an opportunity to slow down a little bit, give buyers more options, and things move a little bit more normal versus these crazy rates that we saw last year with month over month appreciation and year over year appreciation in double-digit numbers. So the year-to-date statewide home sales were up 27.3% in July. Now, California housing market moderated for the third straight month in July, with both home sales and prices tempering from the heated conditions seen over the past year. A lot of that is due to what we just talked about, right? We saw these crazy numbers last year. Things have started to slow a little bit. And the media takes that and says, well, the housing market's slowing. Yeah, it's slowing, but it's slowing from crazy numbers last year. It's not dropping by anything substantial. And again, those numbers that we saw last year were not sustainable. And so any sort of decline isn't necessarily a bad thing, but it does moderate, which is ultimately what we'd like to see, because it slows things a little bit and gives buyers more opportunities to get into the housing market. July home sales, as we mentioned earlier, dipped 1.6% on a monthly basis from 436.20 in June, and we're down 2% from a year ago. And it goes on to say, despite the downward trend, California home sales maintain a solid year-to-date increase of 27.3%. And we mentioned that earlier. After setting record highs for the past 4 consecutive months, California's median home price slipped 1%, as we mentioned, to $811, and that was from $819 in June, but that's still up nearly 22% from $666,320 recorded last July. Maybe that was the curse, right? The 666 from last July. Things had to move from there, right? This time they went up. I don't know, just talking randomly. Anyway, the median home price in California remained above the $800,000 benchmark for the 4th consecutive month. So median home prices here in the state of California are still above that $800,000 threshold, and they have been for the past 4 months. Now we'll talk about what that means here in just a little bit when putting in offers and how far above the asking price things are selling, so that you know as a buyer how to approach homes that are on the market. Maybe even if they've been sitting a little bit longer, we'll talk about that. However, home prices should ease as housing inventory improves in the third quarter and the market continues to normalize during the traditional off season. So we're moving towards the end of summer. This is typically the time of year when things start to slow down anyway. We're seeing a little bit of that at the moment. As we move into the fall-winter market, California doesn't really have a fall-winter, but fall-winter market, things are going to slow even further. Typically, right? Kids are back in school, vacations are over, people are less likely to move during this time. But we've got a couple different things going on out there at the moment, right? We've got this Delta variant playing into potentially, maybe limiting potential supply coming to the market, right? Maybe sellers that are afraid of this are no longer wanting people to come to their homes. We had this last time. I'm not sure if it's going to be a factor this time. And as less homes are available on the market, less inventory coming to the market, we've seen an increase, but we've seen it actually slowing here recently. You're going to have less potential sellers seeing less of an opportunity for them to move because they're not seeing the home that they want to move into on the market. Therefore, they're not able to list their home. We talked about this over the last couple of months, and I think you're going to start seeing more of this if we don't see inventory levels actually increase. But at the regional level, all major regions posted a dip in sales from a year ago when home sales began to surge as mortgage rates continued their downward trend. So rates, obviously, big factor in the way that the housing market has progressed and accelerated, if you will. And we've talked about, or we will talk about in a minute, how interest rates have actually come back down in July from previous months. And that's part of the fuel keeping the housing market moving forward. But San Francisco Bay Area and Southern California only saw a 1.4% dip in the number of sales, which is holding up really, really well. Whereas counties like Napa, Solano, San Bernardino saw sharp declines in the number of sales. Now, is this because there's less buyers looking, or is this because there's less property for these buyers to actually buy? Hard to say, but what I can tell you is I have agents out there showing property in the San Bernardino markets and multiple offers on everything. Everything's selling above the asking price. So, yeah, the number of sales is dipping, but why is it dipping? And we don't know here if it's just because the number of buyers, it's buyer fatigue or buyers backing out. They don't want to purchase. Is it buyers that have just said, you know what, I'm not going to pay these prices? Is it an affordability thing? It's hard to say, right? It doesn't go granular in that data and why, but I can tell you that it's still competitive out there. It's still competitive here in Orange County. Multiple offers on every offer I've written in the last, I don't know. I can't tell you the last time I wasn't in a multiple offer situation. How's that? So things are still competitive. Nearly 3/4 of all counties, 38 of 51 tracked by the California Association of Realtors, had a year-over-year decrease in closed sales in July. So the number of sales actually closing decreased, with 26 counties declining by more than 10% in sales from last year. Again, we can say, hey, the market is slowing, or we can look a little bit further and say, why is the number of sales declining? Well, we've got less inventory than we had last year. Is that a reason? Why is the number of sales? Because things I'm seeing are continuing to move forward. Now, it could be a little bit of slowing in the housing market, but we haven't seen it locally, or I haven't seen it as a real estate agent at the moment making offers. Median home prices in all major regions remained elevated, but only the far north region set a new record high in July. All regions recorded a double-digit surge in median price, with the far north up 26%, followed by San Francisco at nearly 24%, Southern California at nearly 22%, Central Valley at 20%, and Central Coast at 11%. 49 of 51 counties tracked by California Association of Realtors recorded price growth on a year-over-year basis, with 46 of them reporting a double-digit increase from last year. Mariposa County was down nearly 10.1%, Santa Barbara nearly 7%. They were the only counties with a price drop from the same month last year. The state housing supply condition continued to improve, it says, with active listings reaching the highest level since last October. The number of for-sale properties increased 15.4% in July, from the prior month as more homes were being listed on the market. But it goes on to say, despite an increase in total active listings in July, new listings added in the month dipped slightly for the first time after gaining year over year for 4 straight months. New active listings inched up from June by 0.7%, but dipped on a year over year basis by 0.9% in July. So month over month, we saw an increase, but year over year, we actually saw a decrease in July in the number of active homes on the market. Housing supply typically climbs during this time of year and remains on an upward trend until late July, early August. Here in Southern California, where I'm located, Huntington Beach, we see new inventory come on the market every day, but it's met with pending sales and properties going into escrow. So our active inventory hasn't really built. I've been following it for about a year now on a daily basis. And while it goes up, it comes right back down, and the inventory hasn't really reached levels that you've started to see huge price decreases. Nearly 4 out of 5 counties reported by California Association of Realtors decline in active listings from late July. So nearly 4 out of 5 counties reported by the California Association of Realtors decline in active listings from last July. Get that. More inventory is coming to the market, but there's less active inventory from last July. So the numbers aren't increasing. It's being met with buyer demand. The unsold inventory index improved slightly from 1.7 months in June to 1.9 months in July, but remained sharply below last year's level of 2.1 months. So we've seen inventory increased, 0.2 months supply. A normal balanced market is somewhere between 6 and 7 months, right? So we're going to need inventory to increase substantially to get more of a balanced market, and we're not seeing that at this time. The median number of days it took to sell a California single-family home remained flat from June at 8 days in July, but was down from 17 days in July of 2020. 8 days, guys. That is very, very quick. And I can tell you, writing offers with buyers, things are moving in a flash within a couple of days. If you're not seeing it, then it's chances are it's gone. And even those homes that have been sitting on the market a little bit longer are still getting pretty close to the asking price. I mean, I had one sit on the market for nearly 25 days, received 2 offers at that 25th day, and we ended up selling just above the asking price. Even though it's set on the market, quite a bit longer than the 8 days that they mentioned here, we still got near the asking price. And that's more or less what I'm seeing in talking to other agents as well. As I mentioned earlier about interest rates, the 30-year fixed rate mortgage averaged 2.87% in July, and that's down from 2.9% in July of last year. So the market was crazy in July of last year. Interest rates are a little bit lower even during this time this year. And even with that said, new inventory coming to the market, the number of active listings isn't really increasing. But what's happening on a in a statewide basis, this chart got skewed somehow, but essentially it shows that California single-family homes in July were $811 on the median price versus $819 in July. Townhomes 600 versus 600 hasn't really moved. But let's go down here and talk about, and you can see this, right? We can go down to the different areas, and I will put the link in the description below if you want to check it out. But most of these, that are declining aren't declining by anything crazy with regards to the, the prices, if you will. But here in Southern California, Orange County, where I am, we went from 1.138 in June, and now we're sitting at 1,090,000. So we decreased a little bit. Back in last year, this time we were at 880,000. And even with this showing a decline, that's all of us as a county, but I haven't really seen that decline in prices. And again, it's the median home price, it's not the average. So just keep that in mind. And even in San Bernardino County, where they talked about, the number of sales declining, right? They went from 435 median home price in June to 440. So the prices have actually increased. So less sales and the prices are increasing. What does that mean? It means that you got to read between the lines a little bit to get the actual, the actual information there. But let's talk about inventory. California single-family homes, 1.9% in July versus 1.7% in June. Condos, 1.7 versus 1.6. And here in Orange County, where I am, 1.7 versus 1.5. We were at 2.5% last year. And you can go on and to see Riverside, San Bernardino, San Diego, and Ventura. So San Bernardino it's saying that, inventory went from 1.9% to 2.2%. So even though inventory increased, the median home price actually increased as well. So more homes came on the market and the price still went up, which tells me that, buyers aren't actually out there getting prices well below the asking price. So if you are a home buyer and you're looking to take advantage of the housing market, make sure you're working with a professional, as I always mention. Make sure you have a professional lender as well. And if you need either of those, do me a favor, hit that link in the description below and I'll connect you with someone. But, talk to somebody that's actually out there, boots on the ground, and can guide you in the right direction. Have them run comparables and show you exactly what's happening in the market. Now, as I mentioned earlier, even though homes are sitting a little bit longer on the market, I'm not seeing deals, right? I'm not seeing these major deals in the market. Maybe you're selling at the asking price versus not selling at the asking price. But one of the factors that I must have skipped over in that report was, the list to price ratio. 103% is where we're selling. 103% of the active inventory. 103% of the list price, which means if a home is selling at 100,000, it's actually selling for 103,000 at the end of the day. Right here, statewide sales price to list ratio was 103.8%, so 104%. So, that's not a deal happening in a market. That's homes still selling above the asking price. So just understand when you're out there making offers, the market might be slowing a little bit because less buyer demand, because of Delta, because of the time of year, whatever it is, but it's still not a deal in the market, right? And if you're looking for a deal, then I would say it's going to be tough, right? But make a reasonable offer based on comparables. Work with a professional, let them guide you through that process. And it doesn't hurt. If you want to offer something below the asking price, go for it and see what happens. But I can tell you most properties, as you can see from this report, are selling above the asking price when they're priced correctly. So we're going to continue to update you, or I'm going to continue to update you as more information comes out on this. I would expect to see the market slow a little bit as we move into the fall winter market. What does that actually mean? I think it means I don't think you're going to see more inventory, really. I think you might see a little bit more, but I think it's the time of year when things start to slow down, and it's not going to be any different this year. We're starting to get back into that normal cycle that we have where things slow down during the holidays. I think you're going to have more of that. And if there's still another variant out there, you're going to have less people wanting people to come in their houses, which is going to suppress that inventory. And it's also going to suppress that inventory from sellers looking to buy another property and not seeing it out there. Therefore, they're not listing their home. So I don't think you're going to see a huge change in the market, but as a home buyer, you might have less competition, giving you more of an opportunity to get into a property. But that's my thoughts on the market. What are your thoughts? Let me know. And if you're someone wondering if you should buy now or wait, why don't you check out this video here while I dive into it in a little bit more detail. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.